Welcome back, everyone. Michael here with Offshore Citizen. The deadline for the Portuguese golden visa changes is fast approaching, and I've been talking to quite a few different people about it. And as a result, I figured I would kind of fill you in on some of the things around what is the best Portuguese golden visa investment option based on specific goals. So I'm going to try and break that down based on your perspectives and fill you in a little bit. Now, one thing that you might be asking is you might be saying, "Hang on a minute. The deadline is the end of the year, right?" Really, the real deadline is probably like the middle of October, ideally a little bit sooner. The reason for this is because it's not enough to have made the investment. You have to get all the government submissions, etc., done before the end of the year in order to qualify. So for those of you who aren't familiar, I've talked before, they've changed things starting the 1st of January 2022. The fund option is going to go from 350,000 euros to 500,000 euros, and they're going to exclude properties in Porto, Lisbon, and pretty much the whole coast coming up. So if you want to get in with the current status, which is, okay, you can invest in all those areas, plus you can invest in the fund option at the 350,000, you need to have your applications, etc., in and started that process before the end of the year. You don't have to have completed it. You don't have to actually have the golden visa, but you need to have made those submissions, etc. And so in order to have that all those timelines work well, it means you have to do your investment probably around like early October. So, again, we're a little bit uncertain about timelines and things with government, but that's kind of what I would tell people. And as a result, you kind of have to act fast. So anyway, we're going to talk about that today. I'm going to go through kind of the logic and the different options, etc., and kind of different perspectives for you, and yeah, just kind of weigh in on it. So before we get started, if you haven't already, please hit the subscribe button, hit the notification bell with the all notifications so you don't miss out on any of our videos. If you'd like help with getting residency programs somewhere, getting citizenships elsewhere, optimizing your taxes internationally, protecting your assets, investing globally, hiring people, getting payment processing, forming companies, opening bank accounts, all those things, please reach out to us. You can book a call with me, calendly.com/Michael-Rosman. There's a link in the description below, or send a message to our websites, offshorecitizen.net or offshorecapitalist.com. Okay, let's dive in. Now, so a little bit of background on this subject. I would say that when you're doing a golden visa investment, you should understand the context of what your objective of investing. Now, if it was me who's doing it, I've seriously considered doing it. I may do it at some point in the future, but right now I'm not. If I was doing it for myself, I would care mainly about return of capital before return on capital. Okay, I kind of realized that if I'm going to go out and make an investment, I'm not going to get the best returns on some sort of a Portuguese golden visa investment. Just very unlikely. And as a result, I'm not even going to try, right? What I want something that is going to be hassle-free, safe, relatively easy to deal with, etc. And then going to give me some sort of reasonable return in as much as I can. Okay. So for me, my perspective would be capital preservation. So again, for those of you who aren't familiar, there's a bond option, which is garbage. I would never do it. Then there's real estate investment options. Maybe okay, depending on the region that you're in, if you're willing to find the property. For me, it's kind of a lot of work at this stage to go and find a property that I'm happy with and make sure that it's being managed properly and pay all the associated fees, etc. So this brings us to the other option, which is investing in one of the funds. And there's actually, as I mentioned in some previous videos, I've done videos specifically on the fund option. There's some pretty good funds out there. There's some pretty bad funds out there. And there's some that are kind of in between. So one of the things that I often talk to people about is helping to kind of direct them based on my analysis of the ones that I consider to be better. This being said, let's kind of pay attention to how this works and kind of the mindset around this. So the funds take place in two forms. You can have private equity investments or you can have real estate investments. Now, if you're looking at private equity investments, in theory, the upside is probably higher. There are some that, purport to have very high numbers or, project very high numbers. My view is kind of that those high numbers come with a bunch of extra risk, a bunch of extra uncertainty, lots of things that can go wrong, etc. It could pay off, right? You could invest in some sort of a, VC type investment, some sort of a private equity type investment, and it might work really well, right? I hope that it does. This being said, for me, when I'm looking at it, I'm not really going after that. If I was going to invest for some VC thing, it wouldn't be in Portugal. And as a result, I'm looking for preservation. So when I'm thinking about preservation, what am I thinking about? So first of all, real estate, much more predictable, right? That's number one. Number two, I don't want to do much that has to do with development. Maybe we can do some renovation, but I don't want development. The reason is, generally in my view, I've just watched more people lose money in real estate development deals than I have pretty much anywhere else. So to me, cash flow equals safety. All right, we want cash flow. Number two, I want relatively low leverage. Now, here, in theory, okay, no leverage is technically safer, but a lot of the funds are like 20 to 40%. And to me, on solid real estate, given how low interest rates are today, et cetera, it's pretty safe. You are in a position where, true, by doing that, you could end up with interest rates rising. My view is it's probably unlikely that interest rates will rise, and this is mainly because I just don't think that it's palatable. I think that the harm that they would do to this economy, which is in basically a bubble, very high valuations, lots of debt, etc. I think it's very, very difficult for central banks to raise interest rates, and it's unlikely that they will. So my thesis is sort of take a look at what happened in Japan post-1990, and you can see a little bit of kind of a similar element. Obviously, there's some differences, but yeah, that's something. The next piece that I would consider is, so as I said, we want cash flow, we want not development, and we want to be in a situation where we've got low leverage, if any leverage at all. Then I would also want to understand what is the tenants like, right? What types of properties is it? Again, I want some that are, in my view, going to be stable. Ideally, I want something that's purchased for below market value, and I want to understand how it is that they drive that. And those are basically the things that I'm looking for, as well as all the normal stuff in terms of management team and having it so that the people involved have good financial controls, so somebody can't use it as their own private piggy bank. So anyway, that's like a mental model for if you're thinking wealth preservation. Okay, on the wealth preservation side, let's strip off the private equity deals. Let's strip off the development deals. Let's strip off any deals where there aren't good financial controls. Let's strip off the deals where we don't have some sort of cash flow. Let's strip off the deals where we're in a situation that the properties are being bought for market rate or higher. Seems like a terrible idea to me. Let's strip out if there's going to be some concern with the tenants, right, based on the type of property. And let's end up with pretty much what's left. And those ones are probably going to be relatively stable. They could go up, they could go down. It's the crystal ball is broken as to what Portuguese real estate will do over the next 5 years, but at least you're in that position. And to me, actually, you may be taking on a greater degree of safety by doing one of the funds than buying an individual property. Now, we can contrast these, okay? So what's going on here? If I'm buying an individual property right now, I can still buy in Lisbon and Porto. So, okay, that is a more liquid market, meaning it's easier for me to get in and out, right? The funds will be able to do that going forward, so that's good. Individuals will not. So you're entering a more illiquid market. Now, the problem I see with buying the real estate is you're typically buying at a price point that everybody knows is the golden visa price point. So that property that should be $320,000 ends up being $350,000. The one that should be $470,000 becomes $500,000. So the likelihood is you're buying for above market value rather than below. The funds don't have that restriction because it's a pool of money. They can go in and they can buy properties that are $600,000 or $400,000 or whatever in order to avoid that environment. So I think that's quite a good thing, okay? Obviously, if you wanted to live in a place, you could come and you could, pick a property that you like for $700,000 and buy it and probably get a better deal than a property for $500,000. So that's something to be aware of. The other thing that you could consider is, of course, buying a property yourself. You have the ability to buy an older property and have the ability to refurbish it, add value. You can buy any property, so that's also pretty good. So I think there's some security there, and if you're prepared, then perfectly good. But otherwise, the funds are also a good way to go. So just if you pick the right one, kind of narrowing down on that. Now, what if you wanted to have higher upside? To me, here's the things to consider about the higher upside side of it, okay? First of all, understand that private equity in Portugal itself, I mean, Portugal's a small market. There's like 9 million people or something who live there. So quite a small market. How many good deals are there? Skeptical, right? So you want to be very careful about how it is that they're able to buy the deals. Further, I'm concerned about the exit time, okay? If you're in a situation where you're trying to sell a property and you want to sell it this year, you can discount it 5% from the current market value and sell pretty quickly in most cases. By contrast, if you have a business and there's just no buyers for that type of business at that price point, etc., the discount that you may need to offer in order to get out at the time that you want could be an issue, right? Now, don't get me wrong, maybe the market's hot, maybe you're able to package up a bunch of businesses, sell them to a PE firm at some high multiple and do great, right? That's possible, but much more difficult. So when I'm looking at it from the upside standpoint, I'm looking at, where is their growth, right? Where am I picking? So there's some arbitrage that you can do in terms of buying companies at a level that the multiple is low, packaging them up with others, and then being able to sell at a higher multiple. So if you can get in that range, if you can be in a high growth space, if you can be in an area where it's a fast growing market, et cetera, then potentially there's higher upside. It's just, comes at the expense of a lot more risk. So take it for what it is. You can look at it from either perspective, but I just pay attention to, it's a pretty small market. There's not a lot of sellers, not a lot of buyers, not a lot of these opportunities. Some of them you'll see not all the money's invested in Portugal at all, and that plays into it as well. So it's something to consider. Anyway, I hope that helps, gives you some context around what the investments are. If you'd like to discuss it or have questions about it, etc., please reach out to me. Again, you can book a call. Hit the subscribe button, hit the notification bell. If you like the video, give it a thumbs up. If you don't, please tell me why. I would appreciate the feedback. Follow me on Twitter, and I'm going to look forward to seeing you on the next video.